Let's talk more about today's rally. Our next guest says thanks to the Fed, he is officially out of the bear camp. Let's bring in Jim Bianco, president of Bianco Research. Jim, always great to speak with you. What specifically about what the Fed has said and or done that makes you think, you know what, it's time to climb aboard the train?
Well, they've gone beyond just, supplying liquidity. That was the early part of the equation. But lately, they've now started in on market support. Look, they started buying corporate bonds today. They announced it yesterday. They didn't need to do it. They did it to just show that they were serious about their intent. But the fact of the matter is, they have put a massive floor on this market. And you know who's noticed is retail. They have noticed it as well, too. First, you cut commissions to zero. Then you allow the purchase of less than one share. You get millions of accounts opened up, an explosion of trading in the market. And when you talk to them or read the Reddit boards, the word Fed always comes up, that they are not going to allow the market to go down. It won't go down. Then you get Jay Powell last week at his press conference when he's asked if the market's overvalued. He didn't really answer the question, but the implication was it doesn't matter. We're going to continue to do what we're doing right now. And it's becoming a force in the market that it's going to go higher. Now, it's not going to be this way forever, but it is this way for right now. And if you think the market's going to sell off soon, you have to find something that says it's going to be so powerful to bring the market down that even the Fed's unlimited printing and the day trader crowd buying like mad is not going to be able to stop it. It's still going to fall. That's a high hurdle to put on it.
So basically right now you're saying put aside the fundamentals. You have to ride the liquidity train.
If you want to go with the fundamentals, I think it was mentioned earlier, they're all overvalued. They're stretched, as Guy said, to be, simple about it. But there's nothing about this market that says it's cheap, other than we make up new statistics, the 2-year forward or the 3-year forward implied earnings ratio, which never existed until 60 days ago. But those are kind of made up numbers. But the traditional numbers say this is a very fully, if not overvalued market. It is about momentum, and it is about the Fed supporting the market right now.
Are you saying, Jim, that the retail investor has had enough power in this market to help this rally go higher, that it's a big enough force in terms of dollar amount that it's actually impacting the move?
Yes, I do think that that's the case. I'm going to push back on what Tim said last night after you talked to Partnoy, and that they do. Now, look, there's no statistics that we could trot out. We can only go with anecdotes. But the one closest statistics we can have is in the options market. They break down trades by the size of the trade. Small trades of less than 10 contracts or more have exploded in orders of magnitude in the options market, many times before higher than the previous peaks. So much so that they're powering the entire options volumes, overall volumes, higher as well, too. The number of trades of one contract in the options market is approaching 15 to 20% of all trades, from practically nothing a year or two ago. So you could see it in the options market. Unfortunately, we don't have the similar statistics for the stock market, but we do know that they're there, and price is set at the margin, and they are the marginal buyer that is new to the market in the last several months.
So you're on this trade, you're riding this rally, Jim. At what point do fundamentals enter the equation, or do you think the Fed's printing press is strong enough to actually get us a bridge to the other side, so to speak, of this pandemic in terms of businesses recovering and actually being able to give guidance and fundamental things that investors typically like to have in order to value stocks? And do you care about whether or not the Fed is able to exit the trade, so to speak?
No, I care about all that. And I do think that there will be a reckoning at somewhere down the line. If my premise is right, and that this has gone beyond liquidity to price support, pushing the market higher, there will be a problem somewhere down the road, but not now. And the market's going higher. Yeah, at some point, when we are done reopening, ING, and we've reopened, ED, and we assess where we're at, and that's it, we're done reopening, maybe there's a disappointment that sets in then at that point, and that we realize we're going to come up short. But we're not there now. We're not going to be there next week. We still got the hope that things will be better next week. Things will be better in 2 weeks because we're going to continue to reopen. More restaurants will be coming online. More people will be able to do bigger gatherings as well. And the hope that things will continue to get better. When we get to the point where we say, you know what, this is it. We're done. We're reopened. This is the economy we have. Maybe at that point we come up short. I actually think we might. At that point, we might run into trouble. But like I said, that's a story for another day. For right now, this liquidity is what's really powering the market up.
Jim, always great to speak with you. Thank you.
Thank you.
Jim Bianco, Bianco Research. And yes, again, Dave Portnoy makes it into the A block here. Let's talk about buying stocks on hope, Karen. I mean, does that work for you? It's sort of like buy the rumor, sell the news, is what Jim is saying, right? Buy the rumor of reopening being promising and sell the news of the actual reopened economy not doing as well maybe as we all hoped.
Right. And I guess, if we come up with a vaccine, then just sell everything right away. I mean, I understand what he's saying, that the Fed is there, and I understand that that is putting a floor under the market. But I do think that, I mean, look, I don't know if we'll get to what happened at the cruise lines just a little while ago of, sort of a setback. So I'm kind of afraid of that because I think things are so overvalued and are already pricing in such a V-shaped recovery. So I am definitely not on hope, and I'm definitely not trading bankrupt companies on hope. I think that's just crazy.
Yeah. Tim?
Well, I think I've said liquidity is what it's all about, so I'm not going to repeat that other than to say there's different parts of the market that have responded more than others as a function of the retail investor. I don't think there's any disputing that. But I also think that you have a cross-asset kind of cyclical thing going on. So you've had this recovery in resource stocks. You've had this recovery in banks. You've had this recovery in industrials and transports that were 2 years into bear markets. So that's part of what's extraordinary here, and that's I think that's the institutional community. It doesn't really matter ultimately, and trying to determine. I don't think we have statistics that are going to tell you what percentage of this came from Robinhood and what percentage of it came from we have those, but they're not out there right now. The more important dynamic here is momentum. Is that fundamentals don't matter? Is that this is the same thing we've been doing since 2009? We've had people come onto our show and complain about fundamentals, saying they want to short it, that the Fed's lit it all on fire, when in fact, all that's really happened for the last 10 years, given a few bouts of volatility here or there, is the market has responded to liquidity, and it will continue to do that. So I agree with Jim Bianco, and there's